That's wrong. Hold on. There we go.
All right. Good morning, and thanks for joining us here on Treasure Coast Solutions. I was familiar with that. That used to be that's the morning show stuff that we used to play, and Frank used to play that all the time.
Oh yeah.
I don't remember where it came from, but my name is Mark Breckbill, and you're listening to Treasure Coast Solutions here on WSTU. We are here every Wednesday from 9 to 10 o'clock talking about things that impact you in your day-to-day lives, things that are financial or economic that may have an impact on you locally, some of the things that are happening nationally and internationally that end up possibly making a difference here. And so just kind of trying to inform and discuss, like I've always said, politics. You can lobby and you can negotiate, and politically you can take a position and work towards that position, and that's always a good thing, regardless of which side you're on. But economics and finance generally is what it is, and you can try as you want to lobby it, and it doesn't work. You still get the same answer sometimes. So we're talking about some of those things that happen, some of those economic issues, and a lot of times when all of a sudden when we take an issue and we start talking about it at an international level or a national level, all of a sudden we think it gets really, really complicated because it's different, because it's not local here. It's international trade, or it's international finance, and so we think, oh wow, that's a lot more complicated. It's not the same thing. So if we do this internationally, I know it doesn't work here, but if we do this internationally, it'll work there. Well, yeah, no. Most of the time, when you kind of boil some of that stuff away, a lot of this stuff becomes very simple or simpler. And you still get the same result. You just may get interim results that you didn't anticipate. But the bottom line is, when you go from A to Z, by the time you get to Z, you're kind of going to be at the same place you might have been if you were down at the local grocery store. So those are some of the things that we're kind of talking about here on the show. We'll welcome any kind of comments you have. 220-9788, 220-WSTU. By no means am I an expert in total on any of this stuff. I don't think there's anybody that knows it all. If they did, they would be rich and not here. So generally, these are principles that we talk about, stuff that has come up. As a CPA, I have an opportunity, and as an ex-banker for a number of years, I had an opportunity to spend a lot of time with economics and finance, and those two things are different, by the way. There's an opportunity to do that, and so it's been worthwhile. And I've been, as a result, exposed to a lot of different things, but doesn't make you an expert on it. One of the things that makes you an expert, and I do have some of this, is the more wounds you have. The best way to learn something is we don't learn from our successes as well as we learn from our failures. And every time I'm involved in a financial or economic transaction where it didn't work out the way I anticipated, I always go back to learn what I could do better next time, or what I did that I thought something would happen and I was wrong, and rethink all of that. So it's good to do that for all of us. Before we get started this morning, I want to talk a little bit about the IRS and what happened yesterday. And Mike had an update on that today, so that was good. But for those that may or may not have known, the Internal Revenue Service instituted this last year a new e-file payment system, the latest and greatest, and it didn't work. So what happened is it didn't work yesterday, which is, you know what? If it works 364 days out of the year and it doesn't work on April 15th, you got a problem. 2 years ago, 2016, April 15th, 2017, basically, for the 16 tax year, on this day, which was, I think, the 16th or 17th, I read that there were 5 million tax returns filed that day alone.
Wow.
5 million tax returns. And so and what happens, of course, is now the government wants you to electronically file. In fact, I was talking to Mike before we started the show, before we were on air here, and it's always hilarious that stuff that the government does, if we did it as business, we would face fines, we would face penalties, we would probably go out of business. But the government gets away with it. And what I'm getting at is this. Well, what I'm getting at is the tax system in general. It's legalized theft. But barring that we have to have money to run the government, and they have a license to steal. So, that was a political statement, by the way. The economic statement is that, or the financial thing is that, for years now, business, particularly banks, have been under this. This has been tremendous for banks. It's also for CPAs. If we transmit any kind of financial data, which of course is what we do, we have to do it through a secured, encrypted, and not just email. It has to actually be through a secured system. So the big companies, that's not a real problem. They set up portals that are such that it doesn't really go over the internet. You're just downloading directly from their server. It's a direct portal transfer, much safer. It's encrypted. They send you encrypted notifications with the password to go to the portal and all kinds of things like that. You can probably imagine that's pretty expensive. For a small business like here in Stuart, any CPA firm or even law firms, small banks, that kind of thing, even the regional banks, you're talking about probably millions of dollars in costs to get that all implemented and to make sure that it's valid. Because if it's not, the government can shut you down, fine you, penalty, take your licenses away, do all kinds of good things. I looked at it previously, and for me, as a small firm, to pay somebody to encrypt email transmissions. Like, say, for example, a bank calls me and asks me, I need 2 years tax returns for so-and-so. Can you send me copies of their last 2 years tax returns? And, of course, the client's supposed to have the tax return, but they always lose them. And or the client could call me and say, hey, Mark, I've lost my tax returns. Can you send a copy to the bank? And for me to do that would be it cost, I think it was around $25 to $30 per email that I have to pay to do that. So if I send them an email with that stuff, and then they, of course, will send back and say, oh, Mark, I forgot I needed this return too. So now I got to do another email. That's another $30. And so by the time I'm done, just to email a simple PDF file of their tax return, I'm looking at, probably $60. Well, I can get my car and even bill them for it and drive it down there. I can drop it in the mail, which there's no requirements. I can drop it in the mail. I don't have to secure it at all. And that's kind of the funny thing about all of this stuff is we worry about the electronic stuff. We worry about all of the, oh, man, they're going to get my data. They're going to steal my data through the internet. They're going to reach up into the internet and just yank my data out. Yeah, no. The most of the theft of financial data still comes the old-fashioned way, dumpster diving. They go in and they get your receipt from your credit card. They get stuff that you throw in the trash that you don't shred. If you really want to protect your security, take somebody like Archives Management and take your stuff and pay them to shred it all so that it's all destroyed. And it's not out in some dumpster someplace. And I will tell you, I don't care how many times you rip it up, they can get to it. We were talking this morning about Phil DeBerard was on the Martin County Business Exchange agenda today, talking a little bit about some of the issues relative to, or some of the things relative to driving, liability, auto liability, texting and driving, and actually really, really pretty interesting. So if you get a chance and you can listen to Phil talk about it. This was young Phil. He's my son's age. He's knows tons of stuff about this thing. But one of the things that he was saying is that if somebody that knows what they're doing can get a hold of your cell phone, they have almost every bit of information about you that you could ever imagine. Where you were, when you were there, what your heart rate is, they can almost tell everything. It's amazing what they can get out of that. And how much information they can get. So, but again, that's kind of the good old-fashioned way. It's not because you're transmitting it and they're extracting it from something. It's because they steal your cell phone. That's like giving them your computer. If you give somebody your computer, they got a lot of information, but they got to get to it, and so it's easier for them to hack into your computer than to try to figure out how to steal an email transmission. And so that's kind of we worry about all this stuff. Then we mandate it all, and we penalize the private industry if they don't do it. Yet the government implements an electronic filing system and forces everybody to electronically file about 3 or 4 years ago, which caused massive identity theft to the government because of the requirements. There were no controls on it, and so people were filing fraudulent returns. Again, they weren't stealing people's data and starting and opening credit cards and all this kind of stuff. They weren't doing that. They were filing fraudulent returns, and doing fraudulent returns and claiming a refund and then disappearing, and then the government couldn't get the money back. So we as taxpayers were paying out billions of dollars. For example, and this is how bad it was. And again, this is just all these people did was just get somebody's Social Security number, and because of the lack of controls on the electronic filing system, they were able to file fraudulent returns. There was a few years back, there was a person out in I think it was Pahokee or Belglade Belglade that had filed 500 tax returns with refunds and earned income credit from the same address in the same in the same location. That's to the same party. It's amazing. How could you get away with that? But just the basic of checks. But you see, here's the thing. The government didn't want to do anything to delay your refunds because that would make people mad and they would come after them. So instead, they made it easier. Whoa, if you electronically file, you can get your refund back in 4 to 7 days or something. Well, yeah, but then the government doesn't have all the documentation to determine, first of all, whether you're entitled to that refund, and second of all, whether you are you. So all of a sudden, all this money went out. It was paid out. Then when the documentation comes in, now all of a sudden, when the legitimate person files their return, well, there's all kinds of safeguards on that. You can't get in and tell the person to stop. You got to provide them with all kind of information. Basically, you have to go to the IRS offices. You have to get a separate PIN to file from now for the rest of your life. You got to wait forever to get your money back. It might take you a year to get your legitimate refund back. It was crazy, but that's what's happened. So now the government decided to improve the e-file system. And I guess somebody didn't even think that maybe on April 15th or April 17th in this case, there might be a lot of people filing tax returns that day that were making payments. I mean, if you think about it for a minute, if you got a refund coming back, you're probably filing your return as quickly as possible. If you owe money, you're not doing that until April 17th. You're doing it the last possible day. And so the most tax returns that owe money are going to be filed on April 17th. That is actually when the biggest collection day occurs. And yesterday, the system would not accept payments. They could not accept any payments yesterday at all. So if you filed your tax return yesterday and you owed money, now again, it shouldn't affect your money going through if you got a refund coming or whatever. But if you've owed money and you were making a payment, which, of course, many clients are because they're extending their return, they're making an extension payment, or they're paying their taxes, or they're making an extension payment to pay their first quarter estimated taxes because their tax return stuff isn't ready yet, that payment may not have gone through. Now, according to what is being reported on a couple sources on the internet, I haven't been in my office yet, so I haven't seen it from the IRS directly. But they're saying that you've got until today to get that payment through, and you won't be penalized. So, but if not, but you need to be aware of that. If you have not, if your return didn't get filed because you did an extension and you made a payment, or if you filed your return and you made a payment, you need to follow up. If you did it yourself, you need to follow up to make sure the payment was accepted by the Internal Revenue Service. If you did it through your CPA, just double check, make sure that they're on top of it. For example, in our situation right here, like with many CPA firms, our tax people are taking a couple days off this week because they worked right through January 31st getting the previous year's tax returns finished because of the hurricane, and so now they started right into this tax return. So after they get everything done yesterday, they're taking a couple days. So bottom line is you just need to check. That's not a problem. Your CPA firm has an opportunity if an extension is rejected. You have generally about 5 days in which to refile it and have it accepted, as long as you got documentation of the rejection, which you should have from the IRS when they reject it. And then if it still doesn't go through, you can mail the payment in and mail the extension and the payment in. The problem that you got is this, and this is why it was kind of important to wait, is that yesterday when all this was happening, the IRS's instructions said, now they came out, I guess, today and said that, okay, we're going to waive penalties if you don't get yours filed till today. But yesterday when we were trying to figure out what we were doing, they didn't say any of that stuff. So yesterday what happened was you had a choice. You'd already filed your return or your extension, and the payment was already in the system, all right? So they're taking it out of a bank account. So they've already got the information to take it out of a bank account. They just haven't done it. But you're afraid they're not going to do it. So the alternative under the IRS rules, under the IRS instructions, is to go and file manually. Send them a check in. Well, now you're going to send them a check in, and potentially they're then going to withdraw the money from your account. So you're going to have paid them twice. I would like to take a poll. How many people want to pay their taxes twice? By the way, if you do, there's an ability to voluntarily do that. I've never, ever had a client say that they would like to pay extra. So most people I know don't want to pay twice. So that was the issue there. By the way, if you did pay twice, and as a result you overdraw your bank account, and they send your check back NSF because you decide to stop payment on it, it's a 10% penalty. I had a client one year that owed $200,000. They used the wrong checking account. They wrote a checking account. They wrote a check out of an account they had closed, and they just picked up the wrong checkbook. Everybody can make a mistake. They wrote the check out. They had plenty of money. It was all in the other account, but they were dealing with a big bank. The big bank didn't really know who they were, didn't realize they had money in another account. So when that $200,000 check came through from the IRS on the closed account, the bank rejected it, said account closed, sent it back to the IRS. So, my client got notification and immediately, gave them a check with the right account. They didn't realize they had done it. They immediately gave them a check for the right account, paid the right number. But it's a 10% NSF penalty. So they had $20,000 penalty that they had to pay the IRS that the IRS would not waive. $20,000 for using the wrong checking account. So anyway, keep on top of this issue. Supposedly you've got till the end of today. Just follow up, make sure it happened. There are other alternatives if things still aren't working right, but find out what's going on, and if you did send your payment by mail, don't put an NSF on it. I mean, don't put a stop payment on it, and so that it'll show up as a stop payment or close, because you'll get a penalty potentially for that, because the IRS doesn't care that you paid twice. So anyway, those are the things this morning to keep a look on, because these are some of the things that are happening. The government wants their money right now. I had somebody say, people don't really understand that the government doesn't care whether you extend your taxes or not. Some people say to me, why should I extend my taxes? Why can't we just get it done? Why should we extend my taxes? Well, for a number of reasons. One, you have less than 4 months to file your tax return. All right. The places that are providing you with documentation to file your tax return, they're also providing that same information to the government. So that's the information the government is going to use. They're not using your tax return to determine whether you filed the correct numbers and are paying the correct tax. They are using all of this other information that's being sent to them directly from the insurance companies, from your broker, from your brokerage firm, from your IRA, from your retirement account, from your wages, from your 1099s, from your 1098s for your lendings. All of that information the IRS is accumulating in your name, and they're looking at your tax return to make sure that you included it. So you have a little over 90 days to get all this done. Keep in mind that you're not going to get your December bank statement until sometime in January. So, if you're double checking what kind of interest you got or whatever else, all of this other stuff, these 1099s and all of that information generally doesn't have to be to you until the end of February in many cases, or it has to be the end of January, but the business has until the end of February to send it to the IRS, and if they find a mistake, they may issue you a corrected form. So technically, and the brokerage firms have had extensions for the last numbers of years, so they're not required many times to get you their documents until the middle of March. So you have less than 1 month for your CPA to check all of your documents for all of their clients, for everything that's done, to make sure that all of these other businesses sent in the correct thing. And trust me, that doesn't always happen. I had a client of mine one year that was self-employed, and he worked for one company only. He was semi-retired. He worked for one company. He got paid $600, which, by the way, is the threshold for having to report. So he had $600 that he was paid. He got a 1099 for the $600. Although he didn't bother to give us those, he forgot, just said it was $600. And he was right. It was $600. We saw the thing. It was $600. The company that did the 1099, they left the decimal point out on the $600. So it got sent in as $60,000. It's Schedule C income, subject to Social Security taxes as well as federal income taxes. So the government sent him a bill for about, in those days, they sent him a bill for approximately $24,000 plus interest and penalties, which kind of surprised the heck out of him since he only made $600 all year. That's a pretty high effective tax rate. But that's the kind of stuff. So people say, well, why don't you get it? Well, yeah, okay. And then I hear people say, well, just get mine done. Well, okay, but how do I pay the rest of the people in my office? I can charge you $45,000 for your tax return, for your 1040EZ or your 1040A. I can charge you that kind of money because I can then have somebody that I hire strictly to do your tax return, and they can sit around doing almost nothing the rest of the year. Because if I got everybody's tax return done by April 15th, there is nothing for us to do. So I have to charge you more, because that means I have to use people at overtime rates and higher amounts. So I got to charge you 20 or 30% more than you should normally have to pay just to get it done by them. But here's the big thing. Other than the practical side of it and the fact that, there's two real reasons why you should extend your taxes. And unless all you've got is a basic W-2. If you have anything else, you probably ought to consider extensions until you make sure you've got all of the forms, including all of the corrected forms. And here's the two reasons why you should do that. One is that the only way you're probably going to be audited nowadays from an IRS standpoint is if you make a mistake on the preparation of your tax return. Now, let me ask you this. If you don't have all the forms, you're going from the information that you've got, not that the government's going to have, and you're preparing your tax return, whether you're using TurboTax or not, you're preparing your tax return at 10 o'clock at night on April 17th. What's your chances of making a mistake, especially if you're trying to file that on time and get that done? Even if you did it in the last week, you're not a professional. You don't do this for a living. You don't know the tax laws that have changed. You don't know the requirements that have changed. For example, I know there's a lot of business people out there. You'd think they know a lot about taxes. How many business people know that this year, if you had an LLC taxed as a partnership, that your due date for your tax return was March 15th, not April 15th, like it had been in the past? And by the way, how many corporations that are C corporations that pay tax realize that their tax return wasn't due March 15th this year? It was due April 15th. So that's the kind of stuff, and that doesn't even allow for what's happening with state returns. So one of the major reasons we extend and advise our clients to extend has nothing to do with workflow. We have to determine how much taxes you owe. So we actually have to spend a little more time with your return, and we don't bill you for that, which most CPAs probably don't bill extra for doing an extension. They just don't, even though they probably spend a couple hours on that. But the reason is that allows you and allows your CPA to ask you questions to make sure that they've got all of your information. Additionally, you're paying somebody to do your return because you want them to get all the deductions you're entitled to. I guarantee you, as diligent as we are in our firm, that Bob and Elaine yesterday were not looking at your tax return going, let me see, what could they have done this last year to change their tax liability? What kind of things could we do? What kind of changes should we make? Let me think about this for a couple minutes. Nope, not yesterday. That wasn't happened yesterday. Wasn't happened the day before yesterday or the day before that. In fact, with 400 or 500 clients, we're doing a lot of that. We're actually starting to work on extensions April 1st. Why April 1st? And that's why I say you have even less than 4 months, 4.5 or 3.5 months, because we have to start working on extensions the third week of March because of two things. One, we need at least 2 weeks to get all of those extensions calculated, because you have to, even if you extend your tax return, it does not extend the time to pay your taxes. You still owe the tax. In fact, you were supposed to have paid the tax in last year in advance. So not only do you owe the tax by April 15th, you actually owed it last April and last June and last September and the previous January. You owed it then because you're required to pay it in 4 equal installments throughout the year. The government wants their cash up front. Your taxes are prepaid. You're not calculating how much you owe in taxes April 15th. You're owing how much you're calculating how much the government owes you, or how much you messed up from the last year and didn't pay the correct amount. Either one of those are going to result in something that you're not happy with, but it doesn't have anything to do with your taxes. And so that's why you have to settle up with the government. You were supposed to have paid in last year. If you don't pay in by April 17th, now you got big penalties. Before you have little penalties, but if you didn't pay it in when you were supposed to, you've got littler penalties. April 15th, you got big penalties. So you have to determine how much you're going to owe. Plus, to top it all off, you have to make your first quarter estimated payment, which is not required. But like I said, if you don't prepay your taxes, you're subject to a prepayment penalty. And that penalty is an interest charge of around 3 or 4%. So for all of the time that you were underpaid, that you hadn't prepaid your taxes correctly. Now, the ironic thing is you're supposed to pay 90% of your taxes in on a quarterly basis, on an equal quarterly basis. April 15th, June 15th, September 15th, and January 15th of the next year. So there aren't even quarters. So first of all, they make it very hard because you can't even remember when they're due. Second of all, the first payment is due is the exact same time your tax return is due. So not only do you have to settle up and determine what you owed from the previous year, make sure you paid in the previous year correctly, but now you've got to pay in the next year. And it's got to be based on 90% of next year's taxes, which you're not going to know until April 15th of the next year after that. So the government says, well, you know what? If you pay in 100% of last year's taxes, we won't penalize you because we know you don't know what 90% of this year's tax is until the year's over. So go ahead and pay out 90%, pay out a quarter of 100% of last year's tax, and make that first payment April 15th. Oh, wait a minute. We're still trying to figure out how much you owed from the previous year. So how am I now supposed to make a quarter of that when I don't know for sure what that is? Well, I've got to calculate that. And I don't have all the forms to do that because not everybody's given me everything I need. For example, I may not have K-1s in from business returns. I may not have, and those K-1s may not be filed because they don't have all their pension information in or their 401k information. So again, it is very, very bad to file your tax return on the due date. You have to pay the tax, though. But it is kind of bad. You should wait. I have one large client that for years now, we always had their return done because they have about 100 partners, members in this entity. And it's a company that it's a big company. It's China-based, and so it's a huge deal. And because of the size, you have to file the K-1s electronically. So we have to electronically file the tax return. And because of the size, they have a number of people out there that are needing K-1s. So we end up getting that tax return done. We get the information we need from China and everything. We have that return done probably because we get everything in about the third week of January or the first week of March. We start on that return, one of the first ones we work on. We get those out. We have all those K-1s done. So we actually are ready to file that return as of March 15th. And not quite March 15th. We had to extend that, but we were pretty close right around that date. We had them all finished. We mailed out all the K-1s, and we do everything. But we do not file the return until somewhere in September. And the reason is the entity doesn't pay any taxes. The K-1s aren't going to change because everybody's filed their personal tax return. But here's what can change. There's a lot of small memberships in this thing. And so what happens is at least 3 or 4 or 5 people every year will contact us and say, by the way, my mom or dad, whatever, my grandma, grandpa, they died. They passed away this last year, and this is now in an estate, or this has been transferred to my sister and I. And so we have to go split their K-1 from their name to their sister and the brother. Or they've done some estate planning or whatever. And so it's not changing anything other than that one K-1. So that K-1, so instead of that K-1 going to the one family member, there's now going to be 2 K-1s. Or there'll be address changes. Oh, we're not at that address anymore. You need to change the address. So we do all of that, and then when we file the tax return, all of the K-1s are correct. None of the numbers have changed, so it didn't affect anybody, and they don't have to refile their tax return in that case. But again, that's a difficult situation, and that's just one. And even though we're ready to file, just because of all of the other data out there that we don't have, somebody will transfer an interest during the year without telling us to a IRA or something, that kind of thing. So anyway, those are the types of things that we worry about. And again, you're not going to get audited unless you make a mistake on your return. So, and let me rephrase that. You're not going to get audited unless you or the IRS makes a mistake on your return. Trust me, there's pretty much a good chance that the IRS is potentially going to make a mistake on your return. Not intentionally, but they're not going to have the correct information. Give you another quick example. I was a individual sole proprietor CPA firm. Well, I had a partner, but I was a sole proprietor. I didn't have a partner. I had an employee. So in the old days, it was just me. There were other CPAs in the firm, but I owned the firm, and it was a sole proprietor firm. So they weren't partners; they were employees. But and so I operated as a sole proprietor for a number of years, which meant that I operated under, first in the old days, originally my Social Security number for tax purposes, and then when you have employment, I had a tax ID number for employment purposes. So, and for 1099 purposes. So all my clients would issue 1099s to me in the name of Mark Breckbill CPAs and with my tax ID number for the sole proprietor. Back in 2012, I switched and created a couple different firms, including Mark Breckbill PLLC, which is now my CPA firm, which has a different tax ID number because it's a partnership. So I still get, now this is 6 years now, and I still get 1099s in the name of my old sole proprietor firm and with my old tax ID number, which would have gone on my personal tax return. If I filed my personal tax return, let's say I had everything done, I filed my personal tax return by April 15th, I'm not going to have all of those other forms potentially that go in my, so if I don't report that income that's incorrectly reported by my clients, if I don't report that income on my personal tax return and show it going in and going out so that the government can find it and match it up, they will send me a bill for that amount because they're going to assume that that was income to my old sole proprietor and that I should have paid tax on it. Now, they're wrong, and the people that sent the 1099 sent the wrong 1099, and I've tried to correct it over and over again. But the bottom line is, if I don't wait and make sure I've got all of those, go through them all, identify the tax ID number because they all come in the same. Some have the right tax ID number, some have the wrong, and make sure I take all of the ones with the wrong tax ID number and put it on my personal return, and then, by the way, jack it up by maybe $20,000 so that in case I miss something, and then I deduct it back out again so it doesn't have any impact, then that's the only way that I can make sure. So can I do that by April 15th? Probably not. And if I am, I'm not doing any year tax returns because I got too much other stuff to do. So that's the other thing. It just doesn't make sense because you got a better chance of making a mistake. And it doesn't make any difference that it's, and the government doesn't care. I have people tell me all the time that, if I don't file on time, I'll get audited. Or it raises a red flag. Or that it'll go in with everybody else's and they'll never catch me. Well, let me tell you what all of that is, what's wrong about all of that. First of all, nobody looks at your tax return, ever. They don't look at it. There's no people to look at it. It goes in and it gets filed in a big warehouse if it's by paper. So what happens is that if you actually filed a paper tax return, they go in, the IRS goes in, and they take that paper tax return. Now, they're not going to do that until about October. All this stuff just gets set aside. The return just gets filed, and there's a notation made that the return is filed, but none of this data is actually put in. So you're not getting audited at all. Nobody's looking at your return. They're looking at all the returns. They're running all of the numbers sometime in October, November, December, after October 15th, because that's when the returns are due. So sometime in January or February of 19, they're going to be actually looking at your 2017 tax returns. And it's going to be a computer that's looking at it, and they're going to look at all of them at the same time. The ones that were filed April 15th, the ones that were filed somewhere in between, and the ones that were filed on October 15th. All of those are all going to be looked at. The ones that were filed in March, the ones that were filed in February, all of those are getting looked at the same time by the computer. And that's all going to be about a year from now, because that's when they'll have all of the data. And then they run these tests. Now, they will kick out some returns right away. There will be some information that they put in, and they will kick it out. For example, this year, if you checked the box that you were in that you had the Affordable Care Act coverage, if they don't have, if you're saying you had coverage and you were entitled to a credit, and you've calculated that credit, and you've got a refund coming back, they are going to hold your tax return until they get the 1095 that comes in for the which one is it, the B or whatever it is for the, or A for the Affordable Care Act, because if you have a refund and you owe that credit back because you made too much money on the Affordable Care Act, the only way they have to collect is to take your refund. It's not like taxes where they can lien your accounts and they can take your money. They can't do that. They're not allowed to because it's technically not a tax. So they have to get it from your refund. They can take it from your refund. They're allowed to do that. So they'll hold those up. Those things are the kind of things that they're doing now, and they're only very basic things. They're just looking at certain issues that they know are theft issues. Earned income credit. They're going to take a look at some of the stuff if you're claiming earned income credit. But even then, they're not electronically looking at it till after the fact. So all they're really doing now is just making notation of who's filed a return. They haven't compared it to anything. Nobody's looking at it, and nobody's doing that. They've got people who are manually entering very basic information, checking off stuff saying it was received, which obviously then you could make a mistake. And they're loading information in manually, which you could make a mistake. Now, the reason the IRS wants you to transmit your return electronically, and we went through this fiasco this year, is A, they get their money back sooner, and B, they have a lot more information to check out. Because trust me, when you file a paper return, they do not put in every information, every line item from your paper return. They do not. They can't. They don't have the time. It would take forever. Like I said, there were 5 million tax returns filed in 2017 on April 15th alone. 5 million tax returns. Can you imagine how long it would take to enter 5 million tax returns in the system from just that one day's activity? So think about that. If last year you had 5 million tax returns filed, and let's say that in the old days, 100%, but let's say 80% of them were paper, how long is it going to take the IRS to manually enter in information into the system to record 5 million, well, in this case, 4 million tax returns, 80%, 4 million tax returns? Months. Are they going to hire extra people to do that? No. Months to do that. It's going to take forever. And that's the first time they're going to look at any of this stuff. And can they make a mistake? You bet they can. This is a clerical person doing nothing but every single day loading in, typing in certain information from your personal return. Do you realize how time-consuming that process would be? It would be tremendous. So anyway, that's the reason why you don't want to file your tax return April 15th. Get it right, because when the computer runs it in January of 2019, you don't want it kicked out. When they get it electronically filed, they can check some of these things sooner. That's why they want the electronic filing. It allows them to check some of this stuff sooner because they can electronically check it against what's been filed for you so far. And they can kick that out at right then. So if you've made a mistake, if they've got a different number on a W-2 than you put on your return and you electronically file, they will know that right away. And they'll notify you right away. But actually auditing you, selecting you, coming out, looking at your receipts, they're not going to do that until January of next year. And your chances of that happening are very slim unless you made a mistake on your return. That's the only way it's going to happen. Or if the IRS made a mistake on your return, which can happen. And that's the other thing I'll have people say to me, well, I just be real careful, I won't make a mistake. You can be as careful as you want. But if the IRS makes the mistake because some business that you did business with reports information incorrectly, or the IRS gets something messed up when they load it in the system, then you're still going to get a bad answer. And the IRS is not going to, they're not going to care about that. The other thing that I was going to mention is that I was talking to somebody the other day, and I know we did this to some degree, and I don't like it. People say, why do you want to file electronically? Well, right now, it's a dual-edged sword. I've had people say to me, well, I don't want the bank to know, I don't want the IRS to know where I keep my money, what my bank account number is. And trust me, they have all of that information, all of it. Whether you've ever written a check out of that account to them or whatever, they have access to everything. They are the IRS. They can look at everything. They can search everything. They can look stuff up, and they have access to all of that. So don't ever think they can't find it because it's not in the same bank as my other stuff. Yeah, right. They know you've got it, and they know you've got a lot of stuff. So that's not the answer. The answer is not that, they still know where it's at. Electronically, the good thing about it is that you have an immediate receipt, assuming the IRS processes it. You have an immediate receipt that they received your payment, how much it was, and that they actually got it. And so somebody said to me, well, we'll give them coupons, and they'll mail the coupons in. Well, what we tell our clients is that you need to mail that coupon in. You need to send it certified mail, return receipt requested. There's different kinds of certified mail. So you need to do it certified mail, return receipt requested. Now here's the kicker that nobody does. You have to make sure that there is some way to tie the actual payment or document with that receipt. The IRS gives you these little strips that have, the U.S. Post Office gives you these little strips that have numbers on it, and you can peel it off, and you can put one on one card and one on another card, and then one on your document, and then that can tie that together. All right? But most people don't know that, and they don't do it, or they don't write on there what it is. And so what happens is you have a receipt that shows you filed something to the government, to the IRS, on April 15th. The courts have not said that's enough. You can say, well, obviously it was April 15th. I was mailing my taxes. No, maybe you were mailing a letter to the IRS saying you hate paying taxes. That doesn't mean that you were paying taxes. That doesn't document that what you said you sent. You could have been sending them one of these letters that I don't have to pay because I'm exempt. So you got to tie it all out. That's the disadvantage of paper. You got to make sure that you get all that kind of thing tied out. So stay on top of that today. Think about that in the future. The IRS could care less when you file your tax return. It's not in the system, doesn't affect anything. They don't start looking at all that stuff until January. The only thing with filing early is they got a better chance of finding a mistake. So don't do that, because if they do find a mistake and they audit you for that mistake, that may just have been a legitimate mistake. And you say, well, what's there to worry about? Yeah, but when they go to that trouble, they may decide to do some other stuff. In other words, they may actually decide to audit you. They may say, well, send me the receipts for that so that I can see that that actually was the correct number. And by the way, when you're doing that, send me your receipts for your business expenses and your mileage and your yada, yada, yada. So like I said, you don't want to do that. You don't want to trigger that. Nobody wants their tax return looked at by the IRS. Not because you're thieves or you're cheating or anything else. It's because of this. It is so complicated that even someone who is trying to do it correctly is probably going to make a mistake. That includes professionals. There is enough complication, judgment, and issues in the preparation of a tax return that we can all make mistakes. Furthermore, you could actually do it right, but if the IRS doesn't want to say that you did it right because they don't want to give up on that issue, they can make you go to court. And now all of a sudden you're spending $20,000 or $30,000 on a $5,000 deduction. You're probably not going to do that. So therefore, you give in. So sometimes you can be right, but you still won't win. So trust me, take a look at this situation. Next year, give some consideration to having a professional do your return and have them extend it, do it the way you're supposed to, and have them take a look at your return and make sure it's done correctly. Well, that's about it. I'm glad tax day's over. The system's broken. I wish they'd fixed it, but they didn't. They actually broke it again. So that's it for most of what I have to say today. Next, I'll be back here again next Wednesday, probably with United Way, talking about what's going on in the nonprofit world right here on WSTU Digital 1450. You've been listening to Treasure Coast Solutions.